Without much ado, my session is on taking us through understanding the current debt situation on the continent. And I'm going to do this in 4 parts, okay? The first one is we need to understand the global debt architecture. We then need to understand a few things around the terminology and the data. And this is, again, a lot of what you are saying in your testimonials in understanding how can we develop the story around debt? How can we humanize it? How can we make it more accessible in a way that our readers, our followers, our politicians, our policymakers can actually appreciate what is exactly happening when we talk about some of the debt situation that we're facing. The third part is going to look at debt relief initiatives, historical, current, and the future. And then the last part will be the future of debt relief under the auspices of the United Nations. Now, a second preface to my presentation is that there's going to be a political economy dimension to it, to link it to what Christian mentioned in his keynote around the AU theme on reparations and reparative justice. Finding ourselves in a debt crisis or in a situation of perpetual debt is not by accident, it's by design. Okay, so it's very important for us to keep that mind frame in store as we're going through the presentation. So let's start with the global debt architecture. I've got five statements there that I want us to just think about. You don't have to answer, but maybe you can write on your notes if you agree or disagree. Trick means that you disagree. Treat means you agree. Number 1, that Africa's debt problems started in the 1970s. So either you agree or you disagree, but just take note of it. There's no right or wrong answer, depending on how you look at it. Africa's debt problems stem from irresponsible borrowing. Now, I know many of you write on this because of corruption, governance, corrupt government politicians, members of parliament, and so on. But there might be an alternative explanation also. Borrowing out of crisis is the only option for African economies. Borrowing out of crisis is the only option for African economies. Fiscal consolidation and austerity are the growing pains needed for economic transformation. Now, don't worry about the terms. I'm going to go through it in the second part of the presentation. But I just want us to start thinking about these sentences and these statements in the context of our political framing of this discussion. Debt cancellation will not work because it hasn't in the past. Debt in itself is not a bad thing. It all depends on how it is managed and utilized. So in all of these statements, what we're trying to say, or what we're trying to determine is, do we have the correct political mindset? If you take the first statement, debt problems started in the 1970s, we had lots of shocks during that time. We had an oil price shock. We had a Mexico crisis in the 80s. Then we had the Russian crisis. In the 90s, we had another oil shock. And then in the 2000s, we've had various financial and economic crises, including the global pandemic. But this is to say that then Africa's history only starts in 1970. Do we agree with that? Do you agree that our history started in the 1970s? No. So that possibly is not the correct starting point, right? The issue around irresponsible borrowing, for you to borrow, there needs to be, who's on the other side? A lender. So there needs to also be the question about, are there people who are lending to our governments in the knowledge that this money is not going to be used for the intended purpose? Do they know that? Or are they lending knowing very well that the cost at which they are providing the loans are extremely high? compared to other places. Do they know this? The answer is largely yes. So maybe we also need to start thinking about the concept of irresponsible lending. So these are just a few things to keep in mind. When we talk about the political economy of development finance and what are our options as a continent, it's important to think of it as internal, external, and then a combination of the both. Internal means, how are we generating our own revenue? Is it only through taxation? Is there production? Is there industrialization? Because many of our countries are very wealthy. We talk about being abundantly blessed with resources above and beneath the ground. So the question is, why aren't we generating domestic resource mobilization? Why aren't we manufacturing? Why aren't we industrializing? Or is it a case that we've just become reliant on external finance? So we want to liberalize and have foreign direct investment because that's what we're told is good for us. We want to do public-private partnerships because we're told the state does not have capacity to do development and its job should just be to facilitate. Or should we just focus on going out and asking for ODA, aid? But we know that is coming to an end. How many of you have been following what's going on in the US? Anyone following what's going on in the US? This side of the room is not even paying attention to me. Only these guys. Is it because I'm standing here? Should I come and stand there? Yeah? Yeah? So it's important, we need to understand the framing of this political economy ecosystem within which we are operating. Very, very, very important. But then maybe it's a combination of the both. Maybe we need good leaders. Maybe we need leaders who embrace the idea of a developmental state, who are not afraid to say, I am going to use the role of the state to facilitate domestic businesses to thrive, domestic industries to develop, rather than just this opening up and liberalizing of the entire economy to attract external finance, external expertise. Why do I say this? I say this because when we start thinking about the debt architecture, these are the kind of institutions that we need to be aware of. So in the first instance, you have debt instruments, you have project-based debt instruments, you have cash, you have swaps, you have treasury, you have bonds, sovereign bonds, euro bonds, infrastructure bonds, you have government treasury bills, and then you have public-private partnerships. So those are the types of debt instruments that we need to be aware of. And each of our countries, the 31 countries that are represented here today, amongst yourselves as journalists, need to be aware on how and what are the different types of debt instruments that government have available to it. So it's not just a case of borrowing from government to government. Many of you report on China, many of you report on the European Union, on the US, but there are many others, the Middle East, but there are many other types of debt instruments that are out there that we need to be aware of. And similarly, as much as there are very many types of debt instruments, there are equally a diverse group of lenders. Historically, we've only been focused on country-to-country lending. But there's also what we call international financial institutions or multilateral lenders. So these are institutions like the International Monetary Fund, the World Bank, the African Development Bank, the Afri-Exim Bank, the Trade and Development Bank, right? These are what we call multilateral lenders because they are international. You also have what we call commercial lenders. So these are now private banks. These are international capital markets, which are outside of the jurisdiction, but you also have domestic borrowing from domestic banks. So it's very important in order for us to understand why we're in a debt situation, we need to understand the players and the actors in the debt architecture. In terms of governance, you have the International Monetary Fund, who act as the police of the global financial system. They are the ones who step in, or are supposed to step in and support when they see there's general financial instability. They have their own form of debt instruments, and policies that they support with. And then you have market signals. Market signals here, and for most of you who write on business-related topics will know that businesses operate through signals, whether they are political signals in terms of political stability or economic signals when an economy is doing well and the currency is strong, exports are strong, and so on and so forth. But in the debt architecture, there is one very, very important player, and this is called a credit rating agency. Credit rating agencies are extremely important in the debt architecture and in the debt ecosystem. They are the difference between accessing a loan at a low rate or accessing a loan at a very high rate. They measure your credit worthiness. Now, there are lots of issues with credit rating agencies. There's only 4 in the world, by the way. All of them are American-based. So that can tell you a little bit about, the political economy dimension of how our debt situation looks like on the continent. So let's take a little bit of a deeper look into our creditors. And you can see a couple of patterns that have emerged over the last 22 years or so. The 2 charts on the extreme right here for Africa and the color codes, yellow is private creditors, the light blue is bilateral, and the dark blue is multilateral. You can see the pattern. Bilateral creditors, that's country to country, has decreased quite significantly. Multilateral lenders has decreased slightly, but the biggest increase has been in private creditors. This means we are no longer borrowing on concessional or cheaper terms. We are going to the market. Who understands the role of the market here? The role of the market is to ensure profit. At the most basic level, it's to confirm and guarantee profit. So a private creditor does not care that you want to borrow to build a hospital or a school or a water pipeline. All it cares about is that you pay its debt back so that it can make its profit and give it back to the shareholders. Yeah? But look from whom we are borrowing. The profit maximizers who don't care about how you get your money. That is why we pay a lot of tax. But again, this is just a pictorial presentation of the debt situation on the continent. Yeah, bondholders are the largest of our creditors. But an interesting point there also, the role of China cannot be underestimated as well, right? But I don't want to get into China because I know some people are pro-China, others are anti-China, and we might be here until next week discussing either one. But it's important to note also, on the bilateral side, things have also changed quite significantly.